Yeah, okay. So the support zone is created on the downside, on the lower side, where the market is, and the resistance is created on the upper side, this upper side. So how is it created? The support is created when the market is rejected within a specific region on the lower side. So when you get multiple rejections, then the market changes direction. What is left here is what we call the support. So in case you see the market coming, the market had a lot of energy, then we had multiple rejections, then the market changed direction. What is left here is what we call the support. And the opposite of this applies on the upper side. When there was a nice bullish move, then there was multiple rejection, then the market changed direction. What is left here is the what? This is what we call the resistance. So this is the resistance, and this becomes your support. Are we together? So our support is formed on the lower side and the resistance is formed on the upper side. So when you get multiple rejections here, then the market, it was a bearish move, then the market changes direction. What is left is what we call the support. In case the market was bullish and we got the multiple rejections, what is left there is the what? Is the resistance. So the work of the resistance will prevent the price from pushing further. The work of the support is preventing the price from pushing down, from falling further than that. So that's the work of support and that's the work of the resistance. So we can work within this support and resistance. Some people call it the support zone. This is what happens within the market after identifying the support and the resistance. I'll show you an example. So once you identify your support and resistance, you can just trade within the support and resistance, because you know if this was a bearish move, this was a bullish move, then it created a resistance here, then there was this rejection after it created the resistance. So when it came here, we are supposed to hit the support, then go back to the resistance. When it goes back to resistance, we're expecting a reversal, then it's pushed back to the support. When it comes to support, reversed, going back to the resistance. So we expect the market to play within the support and the resistance. That's how we expect the market to move. So I said what is left here is the support, and what is left here is the resistance. So this is just resistance, and this becomes your what? This becomes your support. So support and resistance is an approach on its own. So what happens when the market comes to our resistance and creates a resistance here? This is what we call our resistance zone. Can be our it has not disappeared. Damn. Yes. So our resistance here can be our sell zone. So this we can call this a sell zone. And I can call this support my buy zone. Hence now the support and resistance. So when the market create a resistance here, I'm expecting to sell and target my support. When it reaches my support, I'm supposed to buy and target the resistance. Resistance sell, come back to the support, buy from support, targeting resistance, sell from resistance, targeting support, buy from support, targeting resistance, like that. So you can take a trade based on this support and resistance only. You can say, me, I'm just waiting for the market to get to my support so that I can buy. Wait for the market to hit your resistance so that you can do what? You can sell. So that's why we are saying support and resistance. So And that's the reason why I'm saying this resistance is your sell zone and the support is your buy zone. So what happens when the market breaks? So when the market comes and breaks this support, your support zone will turn to be your buy zone. Because we said after breakout, the candle must close with a what? With a body. That's what we said when we were identifying the consolidating market. You must wait for the market to close with a what? With a body. So if it closes below this support with a body, then it comes down here and creates a new what? And new support. So this becomes our new support. This becomes our new support. And this one here, this previous support will now turn to be our what? Our resistance according to this market. So when the support is broken, here it becomes our new resistance because the market will create a new support. Then we might expect the same move. Again, support, resistance, support, resistance. Then after breaking the resistance, if this resistance is broken, this resistance now becomes our new what? Our new resistance, this resistance will now become our what? It will turn out to be our support again. Because this market might decide to come, hit my resistance, or within this area, it might decide to create another resistance, then push down to the support, back to the resistance. If the resistance is broken again here, if this resistance is broken, it becomes now the support, then the market pushes to this area here. If this resistance is broken, what is created here, this resistance now turns to be your support. Then if it turns to be your support, it will create a new resistance, then come back to support, go back to resistance, come back to support, go back to resistance. So the resistance, when it's broken, it becomes your new support. If the support is broken, it becomes the new resistance, and we create a new support here. I don't know if we are together. Are we together?
Yes, we are together.
Yes, yes.
So that's how we can trade within your support and your resistance. Where is Phoebe? Are we together? Hi Frank, how are you? Hi Zamzam.
I'm good, thank you. How are you?
Yes, I'm fine. How's the market, Frank?
I haven't traded since last week.
Okay. Let's hope for a better week.
Yeah.
Yeah, so I've been understood about the support and the resistance. Now, let's go to our chart and see if we can identify now our support and our resistance. You can see this market is already consolidating here. So when you see the market consolidating, always remember to mark like that. Then you wait for a what? Then you wait for a breakout. Yes, then you wait for a breakout. Either on the upper side or on the lower side. So here we're waiting for a breakout here so that we can buy, breakout down here so that we can sell. That's what we're waiting for. Now let me clear all this. Now let's see how we can identify support. We said the support is created when the market reverses within a region. So if this market was bearish, this was a bullish market, then there was rejection here and the market changed direction. So what was created here? This is the resistance. The market changed direction here also. What is created here? This is the support. Create a new resistance, breaks the support, comes back to create a new support here. So this becomes now our support, this region. Then you can see it pushed all the way to this area, created a new resistance, all previous resistance here. created a new resistance, then it was pushed back to support. Buy this support zone, I said it is a buy zone. So you buy from there, targeting the resistance. This resistance was broken and the market created a new resistance. So the resistance is always on the upper side. So anywhere you see the market being rejected, that's our resistance. Let me mark them using the rectangle. This is the resistance. The resistance. I can see there was another resistance here. Another one is here. So long as the market has changed direction, that's my resistance on the upper side. Then on the lower side, this becomes my support. My support. Then my support here. There's also another support here. I can call that, but it's a very small one. So this is your support here, and this is your resistance. That's how you can identify. So how do you draw now on the chart the support and resistance? For you to draw the support and resistance, we look at the tallest wick. This area, we are looking at the wicks. We talked about the body. So at this point, we'll be talking about the wick. So if this is the tallest wick, this is the longest wick on the lower side, this is the longest one. We draw that entire wick. Starting from the wick, just draw the entire wick, pushing forward. Then this becomes our support. Now, the resistance. This is the tallest wick. We're not looking at the body. This is the tallest wick of all. This is another tallest wick, this green one. It doesn't matter the color of that candlestick. Whether it's green or red, so long as it's the tallest one, that's what we mark. That is the tallest one. That's our resistance. If you want to mark again, you can mark this tallest one again. This green one is the tallest, you can see. You mark like that. The wick only, the entire wick only. Another one is here. Like that. Then we said when the support is broken, it creates a new support down here. So this market has broken this support. So it has created a new support here. So you can draw like that. That's the new support. So you can buy targeting this previous support, which will now become more resistance. So that's how you can identify support and resistance. Now, any question? Any person who has not understood about the support and the resistance?
This was way better than the last explanation last class about support and resistance. I don't know why.
Actually, I watched the video and this one I've understood. The other one I had to watch it 2 times and I was not understanding. Now, yeah.
So anytime I have the new group, I always add you again so that you can do a recap to see if you can understand it better.
Yeah.
So that's how you can identify your support, Patrick. That's how you can identify your support and your resistance. So you look at the tallest wick. This is the tallest wick. This one here. That's why we drew that tallest wick only, not the body. So we are expecting the market, and you can see after creating this support, what happened? The market created a new resistance here. Then it came back to our support. Then you can see it changed direction. So this support zone can be your what? Your buy zone, and it acted as my buy zone at this region here. So this was my buy zone. After tapping that support, you press a buy, then you'll be targeting your resistance here, and you can see what has happened. So that's how you can trade within your support and resistance. So when the zone is broken, I said when the support is broken, when it's broken, it creates a new support down there. So that's how the market will always play along.
So when it creates a new support, your buy zone becomes that new support.
Yeah, when it creates a new support, like this one, it has created a new support. So this will become my buy zone. So in case this market breaks the previous support, because this support here, if this market does not is not rejected within this previous support, which was here, I'm expecting this market to come and be rejected here. So this will be your potential buy zone. You buy from there. So this is already the support. You buy from here now, targeting either this support which was here, the previous support, back to that zone again, or you can call this, because these are new support, you can call this your resistance, because you might expect the market to come and get rejected there. So that's how it operates. So this is what I'm trying to say. So if this is my market, the market came all the way, got rejected at the resistance, came back to support, buy, get rejected from the resistance, break the support, creates a new support here, goes back to the previous support, which now will become the resistance. We might expect the market to get rejected, come back to support, go back to resistance. In case this resistance is broken like that, this becomes our new support, not now resistance. It will change now to become the support. Come back to our resistance, come back to our support, go back to resistance. If it breaks the resistance, create a new resistance. This will become now a support. Go back to resistance, come back to the support, like that. So this is what we always expect. Break the support, create a new support. This becomes the resistance. Break the previous resistance, the resistance now becomes a support and creates a new resistance up there. Are we together?
I wish you went to school and just study this one and just go with this one rather than going to study math and economics.
Wow.
Those are also good.
So how do we now trade now within your support and resistance now? How we trade within your support? So how you can trade within this support and resistance? That's the question that everyone has been waiting for. So after the market when you see multiple rejections, then the market decides to change direction. What you wait for is for the candle to break. If you have to break the previous low, if this is the lowest and you see the candle that will break that low, it will turn out to be if this is the lowest candle, like this. Let me show this. The market has started to reverse. If I get the candle that will break the previous low, this zone here, if it breaks, goes below this area, so I can enter there and I'll be targeting where? I'll be targeting this resistance. So you can sell from here after breaking the previous low. You can enter for a sell and target your what? Your support. Once the market comes to my support and taps my taps my support like that. If I see the candle forming a wick in 15 minutes, you can go to 5 minutes and you see the candle will already start to form what? If you were in 30 minutes, go to 15 or go to 5 minutes and you see the market will have started to form a what? A bullish move. So you can enter after breaking the previous high, this one here. Now you can enter for a buy, targeting this area here. So this one will sell from here, targeting here. Then in case the candle starts to form a wick, go to the lower time frame. If you were in 30 minutes, go to 15 minutes and see if the market is giving you a bullish candle. then you can enter after breaking this previous high, this one high here. If the candle breaks there, now you can enter for a buy, targeting your resistance. At the resistance again, wait for the market to start giving you a rejection. If it starts to give you a bearish candle, wait for the third one, for the second one, which will break below the previous low here, then you can sell, targeting your support. At the support, get a bullish candle, enter the previous after breaking the previous high here, bullish candle, you can enter, targeting your resistance. If the candle closes above, a candle that will close above your resistance, you can either enter with the previous high. After breaking this previous high, you can enter for a buy, or sometimes you can wait for a retest, then you can enter, targeting the buy. But generally, in simple terms, before we talk about the retest later, just know the candle, if it breaks above your resistance, now you can buy, waiting for the candle to create a new resistance there. If it comes and breaks below, and the candle breaks with a what? We say the candle must break with a body. If it breaks with a body below your support, then you can enter for a sell, targeting the market to create a new support like that. I don't know if you are together. So the secret is to wait for the candle to give you a bullish candle here, so that you can sell, a bullish candle here within your support, so that you can buy. Any question?
Is that what they call the candle, the engulfing candle? Is that what you are supposed to wait?
Personally, I don't look at I don't look at the candles. Don't look at the candles, because your eyes can depending on the size of your candles, they can lie to you the kind of a candle it is. But I don't look at the candles. I just wait to get a bearish candle here. But if I get a strong one, if I get a strong bearish candle like that, then I know this market has changed direction. I'll be expecting to take sales, targeting this one here, this support. At my support, if I get a very strong bullish candle, a very strong body, I know this market has strongly rejected the support. So it's time to get in for a what? For a buy.
Okay,
It's
so for
breaking
you,
the previous. Sorry. Okay.
Yes.
Just
go
go on.
ahead.
Patrick, that's Patrick.
No,
Okay.
that's not me.
Okay, I'll go then. I was asking,
Yeah.
so just to recap, you said you don't really, it doesn't mind which size of the candle,
Yes.
as long as it closes.
Yes, as long as it closes bullish or bearish. I know some people look at the candles and say, take a lot of years to study the candlesticks, the name of candlestick. Yes, you can consider that. When you see a rejection candle, you know this market has rejected the buys. Now it's time to do the sales. It's also allowed. So it depends. But I said the most powerful thing in this Forex market is how you are able to protect your capital. How you are able to protect your capital. So long as you're able to protect your capital, Frank, then you'll be a successful trader. Just need to know how to protect that small capital or that big capital. That's the most important.
And then the rest, even if you don't know the names of the candles.
Personally, I just know one candlestick, the hammer, and I don't know what it means.
Oh
Because
my God.
I was trading binary. I was doing binary trading.
Uh,
Those who know binary, on a platform we call
I
Didy.
remember that.
And there people study candlesticks like crazy. People take time to cram and study candlesticks. Instead of focusing on how the market is moving, they target more on the candles. So when you see a specific candle, you go back to your books, Some people draw so many candles on their walls so that when they see, they can just refer which candle is that, what does it mean. It means now we are going in for sales. We have rejected the buys, we are going for sales. By the time you place a trade after your confirmation, the market has already left you, or the market has already changed directions. So I don't look at the candles. I don't take a lot of time to. Personally, I don't like cramming, and I like the practical bit of it. I don't like cramming so much stuff. I love the technical analysis.
Okay, so when you say break the previous high, it has to break with the body.
Yes, it has to break with a body.
So it passes, the body passes the wick of the previous high, the previous
Yes,
candle.
yes, and closes, not just passes. It must close.
Close means?
The candle must end forming.
Okay. Okay.
Yeah.
Okay.
And
Okay.
jumps to the next one. That's what I mean.
Okay.
Now,
So
yes.
so what you're saying, you said if you are in the 15 minutes time frame
Yes.
and you want to know if the body is closing, it's to go in the lower time frame.
No, after the
That's what.
body closes, I said if you see the market is tapping your resistance, then it starts to form a wick. Go to the lower time frame. If you're in 15 minutes, go to 5 minutes and see if the candles, you get these two candles. Give the market will start to give you these candles. That's what I mean. Because inside a week, you see so many moves. Let's look at this one, for instance. Let's look at this one. If I go to, this is 15 minutes. If I go to, let me change the color so that yes. If I go to 5 minutes, you see the market already started to give. You can see it will start to give a bullish move. If you go to 1 minute, there will be more. It will have already started to give a momentum. You can see. You can see this rejection. You can see this big green candle now. It means now the market, the buyers have taken over. It played a bit, but at the end of the day, it still went up. So this is what I call multiple rejections. Coming back to the same zone, get rejected, then finally the market flies. I don't know if we are together. So anytime the market taps like this, if you're in 15 minutes and the market will start to give you, to create a wick. If it starts to create a wick like this one, go to lower time frame and you see the market has already started to give you a bullish buy.
Do you ever do a trade or this kind of that kind of trade that goes up and down, that doesn't go all the way straight, but kind of
Yes.
like you're not sure?
Yeah, the market does not just fly all the way from support to the resistance. The market can even come back to the support again, come back to the support, but at the end of the day, it will be targeting this region. So it doesn't just fly straight to your resistance.
I like the
Yes,
one that
someone
flies
the one that flies straight.
up. Yeah, straight is much better. It's
Now you
predictable.
cannot find it's very hard to find that. That's why we combine the lines to know where the market will be reversed next. You remember the trend lines? Like for instance, you can see this market, there was a bullish move. This market was targeting this resistance here. But before it got to that point, it was rejected here. It created a new resistance. And yet we are targeting this area. So that's why we drew the trend lines. For the guys who covered the trend lines, you remember all that. But Frank, you remember the trend lines, the lines we were drawing, the big line, the many lines?
Yes, I
So
remember.
those lines will help you to know before the market goes to my resistance, there's some zone I'm expecting the market to find some headache. it might decide to consolidate, then break to your resistance, or it might decide to consolidate, then go back to the support. For the guys who we've not covered the lines, we still cover that. Are we together? So this brings us to the topic liquidity. Liquidity zones. So within your support and resistance, this is where many institutions put their buy stops or their stop losses or their sell stops. Within these regions here, within your support and within your resistance, these are the areas where you find companies are placed there. They are targeting to take their trades from. So from this support, I'm expecting the big institutions to have their money placed here. This is where they are placing their entries, or their buy limits, or their buy stops, because we are expecting the market to come all the way from that resistance to come all the way to support. Then now their buys can be activated, targeting the what? The resistance. At the resistance, they put their sells, so that they will be targeting the what? The supports. So we call them the liquidity zones. Liquidity zone simply means where the institutions are placed their money. Because if we go further, if you are lazy and you don't know how to identify those zones, but for now I don't teach my students to use indicators. You can use an indicator we call liquidity sweep. Liquidity swing, this one here. So if you place this indicator, it will automatically detect your support and your resistance. Let me clear my drawings. You can see this one. It has already created the support, but it has not created the resistance. Let's see where it has created the resistance. Yes, you can see it has created the support here, and it has created a what? A resistance. This red line here, this resistance. This green zone here is my support. You can see this support here was broken, and this candle broke below the support. That's why I told you when it breaks below the support with a body, I want to note that it has closed with a body below the support. That's why you could have entered for a sell targeting where the next support will be created. So when it breaks, you can see this line is dotted. This dotted line means this support has been broken. In other terms, we say this liquidity has been swept. So there was some money. This is where institutions place their money. Look at this number there. There's also another writing here. This is a number. There's also another one here. So when you look at these numbers, it means this is where the institutions are placed their money. So when the market comes and taps, even if it has tapped with a wick, it means the market has swept that liquidity. So we call that, where's my text? So we call this, if it is sweeps, we call this liquidity sweep. If it is sweeps, if we see a candle that will break, even if it has broken a wick, it means it has taken what? It has taken this money. So this liquidity has been, liquidity simply means money in Forex. When we hear people saying I've liquidated, it means my money has been taken. So when you see this, the market, if you see a wick, even if it's a wick, if the wick just breaks this previous resistance, obviously this previous resistance, that wick will already form a what? If it rejects, it will form a new resistance. So we call that liquidity sweep. But we said if it breaks with a body, we continue buying. If this market sweeps this liquidity with a wick, then we see a candle rejection. We see a bearish candle here, and people want me to call them a red candle here. You can enter with the third one, with the second one, for a sell targeting your support. So it means the market has already taken this money. So this is where institutions put their money. You can see within your support and within your resistance, and we call them the liquidity zones. You can see there was money here, it has been swept. Look at how this liquidity has been swept. Then I said when it closes with a body, you can buy and targeting where the market will create a new what? A new resistance. You can see this one here has not yet been swept. It's not dotted. This one here has not yet been swept, though though it was swept when the market went above this area. So this one is already swept. This one is not yet swept because the market has not gone past this area like that.
The color of the candle doesn't matter in like those zones. Like
Now you can see this one. You can see the liquidity. This support. You can see this support has been created by this red candle. I said we are looking at the tallest wick. You can see this red candle here.
my last
This is
teaching
red.
was
Oh, sorry.
oh,
So, but I think I was very specific. Don't look at
oh,
the
I know,
color.
I'm just laughing because the other teachings, you're taught like specifically, like look at the candle, it has to be either green or red.
No,
Yeah.
no. Look at this candle. This is a red candle. Just look at the tallest. This is a red candle which has caused this liquidity here, this support. Look at this green candle here. It has created the support. Look at this green candle here. It has created the support. Look at this red one. Let me show you another red one. Look at this red one. This red one here is the one which has created the what? The liquidity. Look at this red one also here. So don't look at the color. So long as that is the longest one. That is the longest wick. It doesn't matter whether the color is red or green. That is the tallest wick. That is the longest wick. Either on the lower side or on your resistance zone, on your upper side. So look at this red one. This red one. This is the candle which has caused this. Though this indicator has not highlighted this, you can see this is the one which has created this support. This resistance because of this red one. So don't look at the red one. Look at this red one within your resistance. It's red on the upper side. It's red. Look at this one here. It's green. So just look at the tallest wick.
Okay.
That is my candlestick.
Okay.
It is my candlestick. I'm looking at the tallest wick. So if I get another candle here, even if the candle is smaller than this one, but the wick is bigger, so this candle here will be the candle which will create the what? Is the candle which we will identify as our resistance, because this is the tallest candle. So I need you guys to do more research about the support and resistance. Watch more videos about support and resistance. Very, very simple. It's a very simple approach. Very, very simple one. You can just be trading within your support and within your resistance. I taught a guy all these different approaches. But when I showed the guy support and resistance, he made crazy money and he told me, bro, this is the only thing that I'll maintain to use. I'll not use that. This is the only thing that I've understood now clearly. And since it's crazy money, this is what I'll stick with. So every day it draws the support and resistance and it tells me I'm waiting for the market to hit my support so that I can buy. And I always tell my students, so long as a simple strategy made you money, even if it made you $1, just repeat that strategy again and again, and it will make you more money. So Frank, the money that you made last week, the approach that you used to make that money last week, just repeat the same process again and again.
That's so hard. You have to glue my eyes on the screen all the time, like for 2 hours.
Yes, you need to spend more times on the screen. Spend more times on the screen, and you never get disappointed. Because the more you spend time, the more you start to identify these support zones, the more you start to see the consolidations, the more you start to see the rejection zones where the market is being rejected. the more you start to identify the fair value gaps for the people who joined the yesterday's class. So you just combine all those concepts. You start to see one by one. So the more you spend the time on the chart, the more you identify them. So Frank, Patrick, you were identifying the fib. Just allow me to do this just for Patrick, how to identify the fib. The rest, the guys, the group 4, we are yet to get to this fib. So once you identify your support, first identify your support and your resistance. Patrick, you can use higher time frame like 4 hours if you want to get a bigger picture. But I just show you an example using 15 minutes because you can see we already have our support and our resistance. Now you come now to our fib.
Yes, sir.
Your fib-based extensions, then you start from your support. If this market is bullish, you can see this market is targeting your resistance. You start from here. At the end of that week, not the body, targeting the end of the body within your resistance, like that. Then you draw. Patrick, are we together? Have you understood, Patrick? I said you identify your support and your resistance, come to your fib-based extension.
Yes, I understood.
Draw from the tallest week, the end of that week, to the end of the week at your resistance. Then you draw like that. So we're expecting this market to come all the way here. So we're waiting for a breakout here at 36.43 so that we can buy, targeting 36.48. If it breaks above 48, buy, targeting 36.54. If it breaks above 36.54, you buy, targeting 36.71. That's how you trade. So if this market was bearish, let's imagine this market was already within the resistance and it's pushing down to our support. Now you draw the opposite. You start now from the resistance, going down to your support. Are we together?
Yeah, I have a question.
Yes.
Actually, now I'm understanding the fib a little bit better than before. I said today you're explaining things very good. So I just want to understand what's the purpose of these lines? I mean, with the fib like 1, 2, 3, 4, 5, 6, 7, 8. What are the purpose of those lines?
Did we talk about the trend lines? Who is this?
That's Frank.
Frank, did we talk about the trend lines? I think you did not attend those classes. Did we talk about the trend lines? We were told so many lines.
I don't remember. I think.
Then
you draw from the daily, then you go down.
Yes, we draw from the daily 4 hours, 1 hour, 30 minutes. As you push it down.
Yeah, you identify the consolidation zones and then you.
Did you draw, Frank? I'll do a session with you before tomorrow.
Okay.
So the reason why I'm drawing those lines is to make it simple instead of drawing so many lines the way the others have been drawing, because this is how we've been drawing. So that's why I don't like jumping to the fib before you get to understand why we are drawing those lines. So if we draw these lines like this, so many lines, if we draw those lines, I think you missed out of that session. So give me.
It is true. I've never seen this one before.
Man, okay, I'll sort you. Tomorrow, are you free?
Yes, I'll be free.
Let's do it tomorrow around this time. And even the others. There is the group 4 or group 3. I'll repeat about the lines again. So the reason why we are using this fib, it will automatically draw these lines for us instead of drawing the lines manually. But you need to go through the lines first before you go to the fib. But for now, since you've already started to identify you've learned about identifying your support and resistance, and you've already created interest in the fib, just come to the fib, then we talk about the lines. So draw the fib from the lowest point to the highest point to your resistance, like that. Then I'll talk about why we are drawing all these lines, how to trade within these lines tomorrow. But it works the same as the consolidating zones. Frank, what did you say when we had how to trade within the consolidating zones?
You wait until it breaks out.
Yes, that's the same process here. Wait for a breakout at this line. If it breaks above this line, we're going to enter for a buy, targeting this next line. If it breaks above this line, we buy, targeting this next line. That's how it happens. If it's selling, it breaks below this line, you'll sell, targeting this line. Break below this line, sell, targeting this one. Break below this one, target this one. Break below, target this one. Break below, target that one. Just like that. Then we are drawing the consolidating zones. The secret is just the same. Yes?
So you're saying as you see the market moving up or down, you put these you can put these fib and you see it going up and or down?
Yes, you can put that fib and see the market. You can see the market is being rejected within those lines. Let's talk about the lines first tomorrow.
I never draw anything. I just watch it and just use my eyes.
Okay. Let's do the session tomorrow about the trend lines.
Okay.
So that after that, now you'll be able to see why we are drawing this fib and how to trade within these lines. So for now, we are talking about support and resistance. Do a lot of research about support and resistance. Identify zones without using this board, without using the indicators. Then we can see. You can draw, then you can put the indicator on so that you can see if the zones that you've created, you have identified if they are correct. But so long as the market has rejected that area, it automatically tells you it has created a what? A resistance on the upper side, rejection on the lower side, and change of direction. It means it has already created the support. So do a lot of research today about the support and resistance. So I'm very specific. Just go on YouTube, go on Google, just research specifically about support and resistance. Make sure the video that you are watching is less than 10 minutes, because man, I don't know if we are able to concentrate for over 1 hour watching a tutorial. Some of you find yourself deep asleep, man, thinking about your problems, all already starting to see how big you're gonna be very soon. Then you find yourself waking up in the morning and we are already learning. So let's take our time, watch a very short video that will talk about support and resistance, so that now, in case you have any questions, you can ask during the next session. But tomorrow, Frank and the others will talk about the trend lines, so why we draw all these lines, the importance of all these lines, how we can draw these lines manually. Then later now we'll talk about the fib. So by the end of the week, you guys should be able to make something out of the market. You guys should be able to analyze the market on your own and take a trade at least. So thank you guys. Let's see.
I have a quick question on the liquidity sweep.
Yes.
I just want to understand what's the advantage of knowing when the big institutions are coming in?
They'll help you to know, because the big institutions, they always dictate where the market is going. But first, what I can just research about the support and resistance and the liquidity swing, the liquidity sweep. Then I'll elaborate more tomorrow when we are drawing the lines. I'll talk about the institutions.
Okay.
Okay?
Yeah. Okay.
Okay. But the most important, I said, learn to protect your capital. So this is the assignment. Liquidity sweep. That's the assignment. Study about liquidity sweep, specifically in Forex, not just anything. Then support and resistance again. That's the assignment for today. Please take a screenshot and also share in the group. So enjoy your evening, guys, and see you in the next one.
Thank you.
Thank you.
Yeah.
Okay.